Hello, everyone, and welcome to the Your Mark on the World show. I'm your host, Devin Thorpe, and our guest today is Michael Sauvante, who is the Executive Director of Commonwealth Group. Michael, welcome to the show.
Thank you very much, Devin. It's a pleasure to be here with you.
We're excited to talk to you. You've got really an innovative, exciting idea for how to make impact investing accessible to people who are not wealthy, right? That's the main thesis, to make this an accessible asset class for people who are not wealthy, because traditionally impact investing has been an opportunity for people to invest only if they're very wealthy.
Correct.
So tell us about your idea for how you're going to do this.
Well, let me first of all back up just a short distance here and say that I and several other colleagues have been working on the concept of local economic development for a period of about 5 years, exploring issues related to capital formation for small businesses, banking for small businesses, know-how, etc. How do you essentially nurture and support small businesses at the local community level? Because they are the backbone of jobs within the country. They account, 20 or fewer employee type size businesses account for over half of all the jobs in the country. And so we were looking at, from 2008 forward, given the crisis, what can we do to try and create some systemic solutions to address that? And all along the way, how can we do this in a sustainable, triple bottom line, fashion? So not just simply addressing the economic issues, but the social and environmental issues alongside that. So very much the essence of the impact investment space, which I've been involved in one form or another since the 90s. And we happened to discover about 2 years ago a very unknown concept that actually got its start clear back in Jimmy Carter's presidency. And it was a concept that was pushed for by the venture capital community to come up with an alternate way for them to be able to raise money primarily from the general public, as you were just describing a minute ago, rather than just deep pocket investors, which has been, the mainstay of venture capital since its earliest days, late 50s, early 60s, et cetera. And so the term that's often been used to describe this concept that got created then is a means to democratize venture capital. And you can take that basic tool and you can apply it in a wide spectrum of solution sets for small businesses, of which we've adapted it to the impact investment type of goals and objectives. The particular concept that was approved by Congress, signed into law by Jimmy Carter in literally 1980, 35 years ago, is a concept that is called a business development company, or often referred to by the initials BDCs. And I am comfortable in betting, Devin, that probably less than 10% of the securities attorneys in this country know almost anything about BDCs. It's that unknown. And yet it's actually a major segment within what's called the Investment Companies Act of 1940. It's the part that covers things like mutual funds and other things like that. And in it, what they came up with was a way to be able to democratize venture capital. And one of the chief reasons why the venture capital community was doing this is they wanted to open themselves up to being able to bring in money from more sources than just the wealthy investors. Well, if you go back to when I said this started, 1980, that happened to be right at the very beginning of an explosive growth in the venture capital community. They went from about $3 billion a year under management in all venture capital firms to more than 10 times that in just the next decade, from 1980 to 1990. as a consequence, they basically said, well, we don't need to pay attention to this BDC thing we created because we're being able to raise as much money as we wanted. But from the general public standpoint, that meant they were still going to the wealthy investors and not the general public. So even though the VCs pushed for that, they promptly forgot about it long before almost anybody else learned about it. So, you know, we happened to just serendipitously learn about it about, like I said, about 2 years ago, and started looking into it. And we're absolutely amazed at what had been created and then left to, you know, lie fallow and nobody making use of it. There are a number of BDCs in existence today. In fact, there was only like 3 of them in 2000, 20 years after they got created. There was a grand total of 3 of them in the whole country. That shows you how unknown the idea was. But then in the 2000s, they got discovered by the big financial firms on Wall Street, who viewed it as just another way to move a lot of more money because they're swimming in an ocean of money. And they started addressing the needs of larger companies within the spectrum of what Congress had in mind originally. They originally had in mind early stage companies, startups, Main Street type businesses, et cetera. And the current crop of Wall Street BDCs are completely ignoring those folks. And yet all the mechanisms are there in place. So we spent the past 2 years adapting those concepts, building a structure to be able to apply those long existing concepts and laws, which, by the way, I would characterize the original legislation, for those who are familiar with the Jobs Act and crowdfunding, is really the true first Jobs Act in the country that had elements about it that actually are vastly superior than the one that got passed under the Obama administration. Where we are today is actually with the 2 of them, they give us a much more complete set of tools to be able to work with to address the very community you're saying. And for the listeners who are not familiar with it, we had a watershed moment just last Friday, where after 3+ years
Okay, Michael, let's stay on topic here, okay?
Yes, right.
We're talking about your BDC model. So you've come up with an idea to use BDCs for impact investing.
Yes.
Tell us about your model. Let's not get off on crowdfunding.
Okay. Well, the key is that let's start first of all by understanding what a BDC is according to that original legislation. Essentially, that what the legislation enabled is being able to set up a corporation that could become a public company, just like any other company listed on Wall Street, which means that you, I, and anybody else can buy shares in the IPO, or after they are trading on the stock market, we can buy them. So that's the key part of it that creates the ability.
Great. So what are you doing at Commonwealth Capital? What's your plan?
Okay. So what we've done is we've said, all right, that concept is applicable across the board, and we want to push and promote the idea of using BDCs to address the needs at Main Street, and especially with impact investing objectives.
Right. So what are you going to do?
So we created our own BDC, Commonwealth Group, the management company, formed our own BDC, and in particular, we formed it as the first BDC in the country that is also a benefit corporation. So starting to demonstrate the impact investment objectives. And we are going to require all of the companies that we support under that to either be benefit corporations themselves, or at minimum, they all have to be B-Lab certified corporations.
Fantastic. So you've got the entity set up. So have you raised any money yet for the?
We're just now starting to release the whole concept, and we're starting to work with investors to raise our initial seed funding. And right behind that, we will do something that is unique to BDCs, and that is you can take a very early stage company and actually apply to the SEC and do a public offering, which we're going to do as soon as we can get the approval, allowing us then to apply that to these communities that we're focused on. One other key thing that we're doing, Devin, that's unique with our particular BDC that nobody else is doing is we're using it as a means to launch other BDCs that likewise would be pursuing this.
Yeah.
So, for those who are familiar with the term fund of funds, our BDC would be a special fund of funds BDC that would incubate other BDCs under it till they're big enough to be able to go off on their own and be a public company separate as well.
So now, under the 40 Act, can a BDC raise money as essentially a blind pool? Is that, or do you have to have some portfolio companies identified, or are you prohibited from having identified public companies? How does that work?
You can start off with, as you call it, a blank check or blind pool, company that a raw startup BDC can legally and legitimately apply to the SEC to make a public offering as the first funds that they literally raise if they're capable of financing that process. And so, no, you do not have to have any companies identified ahead of time. Think of it like venture capital. A venture capital firm can't invest till it raises a pool of money. So
yeah. So will you be raising the money under the 40 Act initially then? Will you take advantage of these provisions for your fund?
Yes, we will. So we will be applying to do a public offering under the 40 Act that we will then take and divide it up among these smaller funds to help people to be able to start neighborhood funds or funds that are focused on renewable energy, again, a whole spectrum of different things under that.
The sky is the limit. It's really a unique opportunity. One of the things that we see with BDCs, most BDCs are structured to provide big dividends. The investors that are investing in them and the operators that are running BDCs, by and large, they have big dividends, and so they're investing not equity generally. They're investing in debt securities. Is that how you see your fund operating?
Okay, we will be focused on what we call capital appreciation. So we do not wish to extract any profit and distribute that to the investors. We want to plow that back into local communities, local small businesses, et cetera. So there will not be any distribution, but it would be theoretically a fast growing public company where the value of your stock keeps going up and up and up. And that's how investors get gain. If you think of Google taking off from nothing to being where it is, or Facebook, same concept can apply here.
Yeah. So you'd have a portfolio of these social entrepreneurial, social enterprises in your fund, and then they would increase in value, and that would increase the value of the fund. That's kind of it's a startup version of a very traditional growth fund, mutual fund kind of thing, right?
Focused on small business rather than public businesses.
Right.
One other key thing about Commonwealth Capital, which is the name of this BDC that we created, that I said is a as a benefit corporation in the state of California is where we formed it. By applying for doing an IPO, then we become a public company. As of today, there are no public benefit corporations in existence. And so this could very well be the first public benefit corp, along with being the first benefit corp BDC in the country.
Yeah, these are exciting milestones. Well, Michael, I want to thank you for explaining this exciting new concept to us. Before we go, I want to just touch a couple of personal things to get some insight into you as an entrepreneur, and one who is so socially minded. So first, tell us who you look up to. Who's your role model?
I would say the mentor who was in fact a mentor to me that I consider to be one of the most remarkable businessmen, who also is just an incredible human being, very spiritual human being, is a professor out of Harvard by the name of Clayton Christensen. And Clayton Christensen, given where you live in the Utah area, I'm sure that you're well aware of him. And in fact, I was just reading today that He's been voted by many of the top business leaders out there as probably the top management guru in the country. And I learned from the feet of the master, you might say, here in terms of his business concepts, which we've applied in the development of our whole system. Yeah. And just as a human being, I just can't think more highly of somebody than I do of Clayton Christensen.
Yeah, I had an embarrassing moment with him about 90 days ago. I saw him in an airport, and I went running up to him and just said, I have to meet you and shake your hand because you're my hero. So I get what you're talking about. Great man, author of The Innovator's Dilemma.
Correct.
That's what sort of made him famous, and obviously he's done a lot since, but really a remarkable human being. Great example. Now, absolutely. Michael, why are you focused on social impact?
It comes from the heart, Devin, that as long as I can remember as a businessman, that, the issues of serving humanity has been something deep to me, which is why I was saying about Clay, that I know that's something that drives him deeply as well. And that for me, when I discovered business in college, that I fell in love with, and I said, okay, that's my area of service. And so that to be able to apply that. So I was one of the first entrepreneurs in Silicon Valley that was advocating sustainability and triple bottom line back in the 90s, before folks, even had an idea what it was and was writing about it then, et cetera. Yeah. So it's, I can't say where it comes from the heart. I mean, where does it come from your heart to be so, driven to go down this direction? It's there.
Yeah, I hear that. Well, Michael, one last question. How can, from your experience, you've been doing this a while, you've had some incredible impact. How do we have more impact? I want to ask you for an impact hack, something that we can replicate that you do.
Well, I can't necessarily address other fields because I'm, just so enveloped with the business world as my passion space. But you asked me that question in an email, and I reflected on it, and that what I found for me is that there was sort of a two-pronged element that comes forward for me that I would use as a suggestion to others. And that is that I found that the things that I wanted to try and do resulted from my focusing on trying to ask the right question. What is the problem that I'm trying to solve? And by focusing on that, I found that answers came forward and, presented themselves. And that became particularly potent when I said, and how can I do this so Devin and I or anybody else can have a equally win-win situation? That always asking, how can I structure this so that I'm doing it so I could be on both sides of the table and be just as happy in being on the other side of the transaction. And I use those two elements to drive what I've done in my business. And that's what I would encourage others. If you ask the question, how can I put something together that is a benefit to, my colleague sitting across the table from me and me equally, that's the key that I found.
Fantastic. Well, Michael, thank you very much for taking the time to be with us today. We appreciate your insights. We're excited about your BDC concept and wish you luck with that. Before you go, tell people how they can engage with you and learn more about what you're doing.
Well, I believe on the screen there should be my website, which is commonwealthgroup.net. That's our consulting firm that has formed Commonwealth Capital, and we'll be providing information about Commonwealth Capital from that site shortly. It's also, if you go to the contact page, you can get a hold of me, or go to my LinkedIn page and you can reach out to me that way as well.
Fantastic. Well, Michael, thank you very much for taking the time to be with us. We wish you success with your BDC plan.
Thank you. And I want to congratulate you on the wonderful work you do, Devin. It's just, it's wonderful to deal with people like you in this world. Thank you for your effort too.
Well, thank you. You're very kind. Now, let's do some good.
Absolutely. Let's go. Thank you.